Bitcoin bulls aim to capture $45,000 leading into Friday's $890 million BTC options expiry. Bitcoin, BTC, bulls flipped the table on Friday's options expiry after a 14% rally on February 28. Holding the price above $43,000 confirms a decoupling from traditional markets. For instance, the MSCI Emerging Markets Equities Index is down by 3.5% in 5 days, while the United States Russell 2000 Small-Capitalization Index gained 0.9%. Investors are increasingly concerned about the ramifications of the U.S. Federal Reserve rate hikes expected throughout 2022. As a result, in the past 30 days some big names took a hit. For instance, PayPal traded down 38%, Meta corrected 34%. And Shopify lost 31.5%. The 40-year high U.S. Consumer Price Index 7.5% inflation data caused investors to take profits on riskier assets in the U.S. Dollar Index, DXY, to reach its highest level in 20 months at 97.6. The DXY measures the dollar's strength against a basket of top foreign currencies, and it increases when traders seek shelter on the North American money. Bitcoin is high risk, but its price looks discounted. Bitcoin's recent strength surprised most investors as its correlation versus the Nasdaq Composite Index reached 73% on February 20, nearing the 74% 5-year high in 2020. Call, buy, and put, sell, option instruments are evenly matched for the March 4 options expiry, but bears were caught by surprise after the Bitcoin price stabilized above $43,000 this week. Bitcoin options aggregate open interest for March 4. Source, Coin, Glass. A broader view using the call-to-put ratio shows a balance between the $450 million call, buy, open interest versus the $440 million put, sell, options. However, the 1.02 call-to-put indicator is deceptive because most bearish bets will become worthless. For example, if Bitcoin's price remains above $43,000 at 8 a.m. UTC on February 11, only $155 million worth of those put, sell, options will be available. This difference happens because there is no use in a right to sell Bitcoin at $40,000 if it trades above that level on expiry. Bulls might pocket a $320 million profit. Below are the 3 most likely scenarios based on the current price action. The number of options contracts available on March 4 for bulls, call, and bear, put, instruments varies depending on the expiry price. The imbalance favoring each side constitutes the theoretical profit. Between $42,000 and $44,000, 560 calls versus 150 puts. The net result is $175 million favoring the call, bull, instruments. Between $44,000 and $46,000, 760 calls versus 40 puts. The net result favors bulls by $320 million. Between $46,000 and $47,000, 840 calls versus 5 puts. Bulls boost their gains to $380 million. This crude estimate considers the put options used in bearish bets and the call options exclusively and neutral to bullish trades. Even so, this oversimplification disregards more complex investment strategies. For instance, a trader could have sold a put option, effectively gaining a positive exposure to Bitcoin above a specific price. But, unfortunately, there's no easy way to estimate this effect. Related, Bitcoin a good bet if Fed continues easing to avoid a recession, analyst. Bears are likely to throw in the towel. Bitcoin bulls need a 1% pump above $44,000 to score a $250 million profit on Friday. On the other hand, bears' best-case scenario requires a 4.5% price drop from the current $44,800 to cut their loss down to $110 million. Bitcoin bears recently had $300 million leveraged short positions liquidated, so it's unlikely that they will have the backing required to pressure BTC price in the short term. With this said, bulls will probably continue to display strength by pushing the price to $45,000 or higher during March 4 options expiry. The views and opinions expressed here are solely those of the author.
Trade Bitcoin with up to 100 times leverage. Smash my referral link in the profile and Margex will give a $50 bonus.